In this video, I'm going to teach you the exact strategy that I use to make $912 trading ES futures options. It's so simple that anybody can do it. I'm going to walk you through it step by step. Now, to show you that I'm not BSing you, here's my trade log from Tasty Trade where I did this ES futures. I placed the trade here on August 6th, which aligns with this entry point on the chart. I'll explain how I knew to enter there in a second. And then you can see here that I exited less than a month later, less than 30 days later, September 4th. I exited this trade, which aligns to this here, and I'll tell you why I exited there as well. And that resulted in a $912.50 profit. And we factor in commissions and fees, about $900 profit. So not too bad for a trade that I barely managed. So let me walk through exactly how that's done. Now, not only was I making that, but here's a software that kind of tracks my performance. And you can see here, I'm making a little over $3,000 per month just by using this same strategy. So let's dive into it right now. Here's how we trade the strategy. It's called the 111 strategy. If you never heard of it before, you're going to love this. If you have, don't worry, because I have some things to highlight with this specific trade. So first thing we're going to talk about is how to structure the trade. So again, this is a 111 trade. So 111. What does this mean? Let's call it 111 because there's three different puts we're going to be using. The first put that we're going to be trading is going to be a long put. We're going to buy a put at the 25 delta mark. I'll explain why in a second, but we're going to buy a put at 25 delta. The next one put we're going to do is we're going to sell a put at 23 delta. And then we're going to sell another put at 10 delta. I'm going to walk you through what this looks like in the broker here in a second. But essentially what we're doing here is with these two right here, we're creating a put debit spread. Now, what is a put debit spread? A put debit spread makes money on the way down. We use this to help hedge the trade so that if we're ever in this trade for a while, which we tend to be about 20 to 30 days, if the market to go in a downtrend, we have some protections that we don't have a huge loss. Then again, we have this remaining put that we sold, which is a short put, which is where our income and profit is coming from. So this trade structure is called a 111 trade structure. Now I'm going to show you how to set up on the brokers so that you have more understanding. So they go to trade. This is done on ES futures. Just for example, you can do this on any asset. I like to go out to about the 90-day mark. The ideal market is between 60 to 120 days. So again, you can go anywhere in there. If you go closer to 60, you'll be able to close the trade faster, which will have a smaller profit because there's less time decay factored in. If you go closer to 120, the trade will take longer to close, maybe about 45 days, but you'll be able to make more money. I found the sweet spot to be around 90 days. So if I'm doing that, then I can go here to around the 93-day mark on my DTE. Once I do that, I'm going to structure the trade exactly as I told you. You can see here are some other positions open. What we're going to do is we're going to buy the 25 delta. So you can see delta right here in this column. I'm going to buy the 25. I'm going to sell the 23. This creates a put debit spread, which means as the market goes down, it makes money. But that's not going to help us make money in a bullish market, which is almost what always the market is in, 80% of the time at least. So I'm going to go down here to the 10 delta mark, and I'm going to sell this. By doing that, it creates a net profit trade. If we look at the numbers here, this trade has a 96% chance of making money and winning, and it's going to make me $1,700 if it wins, which is great. Now, we do have some management rules to follow, but let's take a look at that here to understand that a bit better. That's how we structure the trade. Next, how do we manage the trade? I like to manage this trade at a 50% take profit. Now, a lot of people, again, this is a popular strategy, and a lot of people will run this all the way up to 95% profit. The reason why I don't is because these trades do have a lot of risk. Although you have the put debit spread that kind of slows your losses in downtrends, you're still opening yourself up to a large loss. And so because of that, I like to turn trades over quicker, because if I go to a 90% profit, I'm then going to have, if I'm doing one trade a week, I'm going to have 4 or 5 trades open. And if each trade can lose $5,000, that's a lot of risk on the table. So instead, I take a 50% profit and able to close trades every 3 weeks or so. And this way I have less trades open, maybe only 3 trades now instead of 6 or 7. So that way I can reduce my risk by having as few trades open as possible and closing and turning trades over quickly. So that's why I have a 50% take profit. Now, stop loss varies depending on what you want to do. A lot of the people that I teach, they have anywhere from a 200 to a 300% stop loss. I personally like the 300% stop loss to give it time to move. Now, again, this will lead to larger losses, of course, but a 300% stop loss is where we play this. So that's how you structure the trade. That's how you manage the trade. Now, how do we get good entries? Okay. We want to make sure we're only trading during uptrending markets. And then again, ideally red days. So this is how you have an advantage and an edge in the market. Okay. If the market is trending down, there's no reason to enter this trade. This is a bullish strategy. So we're only going to wait until the market is having higher highs and higher lows, aka we are in a consistent uptrend. This is what I saw here, consistent uptrend. Then we had a few period of red days. When we have a red day in the market, that increases volatility, which increases the chances that we get to collect more money as an option seller. We get to push our strike prices out further away, which gives us a higher win rate. Across the board, as an option seller, when you enter on red days, it's better. So when I saw this consistent uptrend with 4 red days in a row, I thought this is the perfect time to enter the 111 trade. Entered the trade, was able to close it less than 30 days later for a $912 profit. That is the strategy. I hope you enjoy it. Go put it into action, and I will see you in the next video.